You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive, where we cut through the noise, get you those key insights from, well, a whole stack of briefings. Okay, let's unpack this. Today, we're taking a really comprehensive look at the global market, the geopolitical landscape, too. You know, the world's grappling with intensified conflicts, big strategic economic shifts. So we're asking, are we looking at a genuinely new global order? Or is this just history repeating, maybe in more complex ways? Our mission, like always, is to give you that shortcut, get you well-informed across FX, commodities, trade, even the real nitty-gritty of geopolitics. And what's critical today is seeing how interconnected all these things are. They seem separate, but they create this huge global ripple effect.
Yeah, that interconnectedness is exactly the striking takeaway here. What's fascinating is how even seemingly small shifts, maybe a subtle change in a central bank's tone or, a localized geopolitical flare-up can send pretty significant ripples across everything else. It makes today's deep dive, I think, particularly insightful for really getting the current global pulse. Gives us a clearer picture of not just what's happening, but why it matters and what it could mean for all of us.
That's a perfect frame for this. So let's jump right in. First segment, currency currents. What's moving global money? We've definitely seen the U.S. dollar holding pretty firm lately.
Quite strong.
And that seems to be driven by, stronger U.S. PMI data. That's basically a health check on U.S. manufacturing and services for anyone unfamiliar. And also some pretty hawkish commentary coming out of the Federal Reserve. Right?
That's a big piece of it.
And this is all just ahead of Chair Powell's big keynote at Jackson Hole. This isn't just like a minor blip, is it?
No, not at all. If you connect this to the bigger picture, the dollar's strength, it really underscores how profoundly influential U.S. economic data and, importantly, Fed signals are globally. When we say hawkish, we mean officials are leaning towards tighter money, possibly higher interest rates down the line. So strong U.S. numbers plus that hawkish Fed talk, it acts like a magnet for capital, drives up dollar demand, and so its value.
Right. And for you, the listener.
Exactly. For you as a consumer, maybe imported goods get cheaper. But for U.S. businesses selling overseas, their stuff gets more expensive. That hits global trade flows.
And we're seeing those impacts play out. Look at the euro. It slipped below the 1.16 mark as the dollar climbed.
Yeah.
Now, traders are anxiously waiting to hear from the ECB's Christine Lagarde later this weekend.
Always waiting on the central banks.
Always. And then there's sterling. Now, it had some support earlier from stronger services and composite PMI data, but it's actually given background. Tested the 1.34 level downwards. That feels a bit counterintuitive, doesn't it? Good domestic data. But the currency weakens. What's driving that?
It does seem counterintuitive on the surface. It could be a couple of things. Maybe broader risk aversion investors getting nervous, pulling back to the perceived safety of the dollar, or it could simply be profit-taking. Sterling had a good run. Now people are cashing in against the dollar's overall strength.
Okay, that makes sense. And then across the Pacific, the Japanese yen has softened up. Dollar-yen pushing back into the 148 range. And it seems totally unfazed by slightly firmer Japanese core inflation data. Now, that feels really counterintuitive. Is there any scenario where that domestic inflation starts to matter more than the interest rate gap? Or is the Bank of Japan just too committed to its easy money policy for now?
That's the million-dollar question, isn't it? Right now, the yen softening, even with that tick up in inflation, it strongly suggests the market is laser-focused on the interest rate differential with the U.S. That gap between the Fed's rates and the Bank of Japan's very low rates is huge. As long as the BOJ stays so dovish compared to a hawkish Fed, that differential will likely keep driving yen weakness. Domestic inflation is kind of a secondary factor for traders at the moment.
So the rate gap is king for the yen. Meanwhile, China, the yuan midpoint, was fixed stronger than expected. 7.1321 versus forecasts around 7.1871.
And that's not just a random number. A stronger fix like that against what the market expected, it's a signal from Beijing. They're likely trying to project confidence, maybe slow down capital leaving the country.
So what's the big takeaway from all these different currency moves? What does it tell us about global investor feeling and what the central banks are thinking?
Well, each move tells part of a bigger story. The euro's slip shows how sensitive markets are to potential differences in Fed versus ECB policy. Sterling's dip, despite good data, hints at that risk aversion, or maybe just technical trading against the strong dollar. The yen, as we said, is all about that rate differential overpowering local inflation for now. And the yuan's stronger fix is, well, it's a policy signal. China managing stability. Put it all together. It shows global investor sentiment is really being driven by central bank moves, or expected moves, especially on interest rates and growth. And all of that directly impacts global trade, investment decisions, everything. For you, it affects costs, investment returns, the works.
It's clear every currency is navigating its own currents, but all within that big global ocean. Okay, speaking of confidence, or maybe a lack of it, let's turn to commodities. Geopolitics often dictates prices there. Crude oil, gold, copper. What's the story looking like? Crude oil seems to have steadied after some choppy trading, but the focus is squarely on Russia-Ukraine, isn't it? There's this real pessimism about any near-term peace deal progress. And that seems to be keeping those geopolitical risk premiums alive and well. Brent's just under $67 WTI in the low $63.
Yeah, that link between geopolitics and energy is just unmistakable. The Russia-Ukraine conflict, with no clear end in sight, it just keeps putting upward pressure on crude. Think of that risk premium. It's like insurance built into the price. Investors are paying a bit extra because the chance of supply disruptions or even just increased demand because of the conflict is higher. It's the market basically saying, we have to price in this uncertainty.
So it's a direct cost of instability.
Exactly. It shows how non-economic factors can really slam global commodity prices. Affects everything from your gas prices to manufacturing costs globally. For you, it hits the wallet directly or indirectly through higher prices for goods.
And it's not just oil feeling these pressures, right? Gold is softened. Seems like it's under pressure from the stronger dollar and maybe anticipation of Powell at Jackson Hole.
Precisely. Gold usually moves opposite the dollar. It's seen as a safe haven. But a hawkish Fed usually means a stronger dollar and higher bond yields, which makes gold, which doesn't pay interest, less attractive by comparison.
And copper, often seen as Dr. Copper, the economic health indicator.
Right. Copper's plateaued after gaining recently. That suggests a more cautious tone. Markets are kind of pausing, waiting for more policy signals, trying to figure out the economic growth outlook.
So it really feels like commodities are caught between these two big forces. Geopolitical events on one side, central bank talk on the other. How do these moves connect to the broader economic picture for us?
They connect directly. Gold's move reflects sentiment on inflation and currency strength. Copper, as you said, is that barometer for global industry. Its leveling off suggests markets are tapping the brakes, assessing future growth, waiting to hear from policymakers. Taken together, these commodity moves paint a picture of investor sentiment that's pretty cautious right now. People are weighing monetary policy decisions against these persistent geopolitical risks. For you, watching copper can be like an early warning signal for the broader economy. If it dips significantly, it often suggests manufacturing and construction are slowing down.
Right, it's this constant push and pull, and that often plays out in global trade. So what does all this mean for international relations, especially between the big players? We heard China confirm President Xi is unlikely to attend the ASEAN Summit in October. That pretty much kills hopes for a face-to-face with President Trump there. Premier Li will go instead. That feels like a pretty significant missed chance for leader-to-leader talk, doesn't it? Especially with trade tensions still simmering. What are the implications here?
Well, this definitely raises an important question about where U.S.-China engagement stands right now. Xi skipping ASEAN, missing that direct meeting with Trump. Yeah, it's significant. It could signal a cooling off in high-level diplomacy. Or maybe it's strategic managing expectations, avoiding a public clash if there isn't enough common ground yet. Either way, it probably slows down any progress on trade talks. Suggests we're still in a period of cautious interaction, not really direct problem solving between the two biggest economies. For you, it likely means continued uncertainty. Supply chains, trade policies, they remain unpredictable, affecting prices and availability of goods tied to U.S.-China trade.
Okay, so a pause in top-level U.S.-China talks. Meanwhile, different front, Canada. Prime Minister Mark Carney spoke with President Trump. Sounds like they acknowledged ongoing trade challenges, opportunities too, and agreed to talk again soon. What kind of challenges and opportunities are we talking about typically? Is it specific stuff like lumber or dairy or broader things?
It's usually a mix. The U.S.-Canada trade relationship is huge and complex. So, yeah, those ongoing disputes, lumber, dairy, always seem to be on the list. Potential new tariffs are always a worry. But there are opportunities too. Things like coordinating on energy grids, cross-border investment, and definitely critical minerals, which seems increasingly important.
And speaking of critical minerals, domestically here in the U.S., the Trump administration is looking at potentially reallocating $2 billion from the CHPS Act funding, shifting it to support critical minerals projects instead, and giving the Commerce Department more oversight on financing those. That feels like a deliberate strategic shift, doesn't it? Highlighting how vital these minerals are becoming. What does this kind of industrial policy actually look like? And why are critical minerals suddenly so front and center?
It's a major strategic shift, absolutely. Critical minerals, they're the essential ingredients for, well, almost everything modern. EV batteries, smartphones, wind turbines, advanced defense tech, you name it. The U.S. currently relies heavily on foreign sources, sometimes from countries that are geopolitical rivals for many of these. That's a vulnerability. So industrial policy here means the government stepping in directly with funding, with oversight to boost domestic mining, processing, recycling, the whole supply chain. It's about reducing that foreign dependency, especially from rivals, and building up America's own capabilities. It's got huge implications for global competition, tech leadership, national security. For you, it's ultimately about trying to make the supply chains for the tech you use every day more secure. It might mean higher costs initially, perhaps, but the goal is greater long-term resilience.
That focus on resilience brings us right into our final main segment, global hotspots, the geopolitical pulse. And this first point, well, it's vital for global stability, but frankly, pretty sobering. Kyiv's reporting heavy overnight Russian strikes, drones, missiles. President Zelensky says these attacks show Moscow has no real intention of engaging in meaningful peace talks.
It certainly points that way.
And then President Trump commented that we will know in about 2 weeks about the conflict's direction. That leaves markets feeling pretty cautious. Ukraine keeps pushing for binding security guarantees while Russia's not signaling it's ready for serious talks. What are the implications of this apparent step up in conflict alongside these mixed signals about peace?
Yeah, what we're seeing in Ukraine is this dangerous mix. Intensified fighting on the ground, but also these deeply conflicting messages about peace prospects. Zelensky's interpretation seems clear. Russia's actions speak louder than words. Russia's lack of signals towards substantive talks seems to back that up. The market caution, reflected in that comment about 2 weeks, just highlights the extreme uncertainty. Nobody knows where this is heading short term. And this ongoing instability, it ripples out everywhere. Regional security, obviously, but also global energy, food supplies, supply chains, international relations. Everyone's navigating this. It's a tough reminder that diplomacy is complex, like multidimensional chess, and the stakes global economic stability are incredibly high.
And the complexity definitely doesn't stop there. Shifting to the Middle East, Israeli PM Netanyahu says Israel is ready to start ceasefire talks aimed at ending the Gaza war, getting hostages released.
That's a potentially positive signal, at least diplomatically.
Right. But at the same time, Washington is urging Israel to scale back non-urgent military actions in Lebanon, specifically to help the Lebanese government try and disarm Hezbollah. That's a very specific request from the U.S., isn't it? What's the thinking there?
It is very specific and likely very deliberate. Netanyahu's statement on Gaza offers a possible diplomatic path there. Washington's push regarding Lebanon seems like an attempt to de-escalate another potential flashpoint. By urging Israel to hold back non-essential actions, they're trying to create space for Lebanon's government to assert control over Hezbollah, which is a powerful non-state actor operating somewhat independently. It's about preventing a wider conflict.
Trying to contain the situation. And then there's Iran. The foreign minister confirmed a joint call with European counterparts is coming up. Nuclear talks, sanctions. But this is happening even as the U.S. just imposed fresh sanctions on ships and entities tied to it. That seems contradictory. Parallel tracks.
It looks contradictory, but it's a classic diplomatic strategy. The carrot and the stick. On one hand, keeping diplomatic channels open, talking about the nuclear deal and sanctions relief, that's the potential carrot. On the other hand, imposing new sanctions keeps the pressure on, that's the stick. The U.S. is trying to balance multiple goals. Engaging Iran, deterring certain behaviors, pushing for nuclear non-proliferation, and managing regional security. It's a very delicate, high-stakes balancing act, using both pressure and diplomacy simultaneously.
A complex dance indeed. And there are other hotspots flaring up too. China condemned what it called a U.S. military buildup near Venezuela, calling it interference.
Classic sovereignty and sphere of influence language there. China pushing back against perceived U.S. encroachment in Latin America, where Beijing also has growing interests.
And then in North Korea, Kim Jong-un was praising officers involved in overseas military operations, lauding their role in, quote, proving the strength of the North Korean military to the world. What's the signal Kim's trying to send there, and who's he talking to?
That's definitely a message meant to project strength. Praising overseas operations, even if the details are vague, signals capability and willingness to act beyond borders. The audience is likely twofold. First, the international community. Its deterrence, showing North Korea is a force to be reckoned with. Don't underestimate us. Second, his domestic audience. It reinforces his leadership, boosts military morale, and fosters national pride. It's about protecting power both outwards and inwards.
Wow. The sheer number, the complexity of all these global flashpoints, it's really a lot to take in right now. It feels like so many things are converging.
It really is. And each one, Ukraine, the Middle East complexities, the China-Venezuela tensions, North Korea's signaling, they all tie into those bigger themes. Global power shifts, national sovereignty arguments, challenges to international norms and laws. Understanding these individual stories helps us see the bigger picture, the immense pressure shaping our world, the tough decisions leaders are making daily. And it also reminds us that things happening far away can and do have very real impacts closer to home.
You know, we've covered a huge amount of ground today. From that intricate dance of currencies, the FX market, to geopolitical risk hitting commodities, those nuanced trade dialogues, and these really urgent developments in global hotspots. What really comes through, for me at least, is just how deeply interconnected it all is. One thread pulls another constantly.
Yeah, absolutely. And, this raises an important question, I think, for all of us just trying to make sense of it all. How do we as individuals effectively process this nonstop flow of information? How do we make informed decisions? Staying informed about these global shifts, it isn't just about catching the headlines. It's really about understanding the underlying forces shaping our world, shaping our future. And as we often say, knowledge is really most valuable when it's not just understood, but when you can actually apply it to how you view and navigate this complex world.
That's a really powerful thought to end on, and maybe something for you, the listener, to mull over as you watch these global currents unfold. How might a seemingly small shift in just one of these areas we talked about, maybe a commodity price tweaks up, or there's a subtle diplomatic move somewhere, how might that unexpectedly reshape a much larger, maybe totally unrelated aspect of your life in the coming months? Could be the price of your next phone because of critical minerals policy. Could be the availability of something you buy regularly because peace talks somewhere stalled, affecting supply chains. Worth thinking about. Thank you so much for joining us on this deep dive. Keep digging, keep exploring. We'll catch you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.